Welcome to Beyond Bitcoin, a podcast about all things digital assets, the global communities they are creating, the generations that are using and investing in them, and the challenges faced by the nations that are seeking to regulate them. The content of this program is not to be taken as investment advice. The opinions expressed in the program by the host and the guests are their personal opinions only. Remember, feel free to subscribe and share with like-minded friends. My name is Derek Graham. I'm the CEO of Portal Asset Management, and my co-host is Nitin Gower, Managing Director of State Street Digital Assets. Good morning, good afternoon, good evening, wherever you are in the world, and welcome along to another episode of Beyond Bitcoin. My name is Derek Graham, and my good friend and colleague is with me here today, as always, Nitin Gower. Hello, Nitin.
Hey, Derek. Glad to be here. I'm tired of saying another exciting week, though not a lot of stuff happened this week, but still, there are a few nuggets that we should explore, I think.
You know, what I thought was fascinating about this week is just the confluence of traditional finance and traditional asset owners and banks and regulators heading towards seeing this kind of rebellious environment of digital assets starting to become monetized, with main payment rail systems getting put in place, on-ramps and off-ramps getting put in place. This kind of all happened this week. And one of the very first and very high-profile ones of these was PayPal. So let's have a little bit of that. Let's unpack a bit of what's been happening with PayPal and the banks, et cetera, and let the audience just see how interesting it is that what were the naysayers 3 or 4 years ago are now players in this space. So PayPal has launched a US dollar denominated stablecoin designed for digital payments and Web3, and to be compatible with the most widely accepted exchanges and wallets and Web3 apps around the world. Not bad. It's ERC token based. Now, by the way, ERC standard defines a set of rules that developers can follow to create their own tokens, which is the Ethereum blockchain. I know that's basics, guys, but on the other hand, it's called ERC stands for Ethereum Request for Comment. Now, I have to tell you that indicates that this industry has no idea about names or branding, but nonetheless, so it's an ERC20 token equivalent, and it's soon to be available for all PayPal users in the US. So this is the first time a major financial company is issuing its own stablecoin. So users can transfer PYUSD or PayPal USD between PayPal and supported external digital wallets, use the tokens to pay for goods and services, or convert any of PayPal supported cryptocurrencies to and from PayPal US dollars. It's an on-ramp, Nitin. It's in and out of cryptocurrencies, and it's in and out of traditional payment world. It's really quite a big step forward, isn't it?
It is. And you know, it's interesting, Derek, because when I was at IBM, I actually spent some time with PayPal in devising this entire, both in terms of risk and technology and how it all comes together.
Yes, you did.
And what's interesting at the time, Derek, that we had COVID, and due to COVID, a lot of early days, you had challenges with credit card transactions and overall transactions because the e-commerce and overall commerce was down. And there was an era when PayPal lost 25% of the overall revenue, and they had to refocus and bring the business back. And the focus was away from crypto and around, because if you remember, they were working with NYDIG as a custodian, and they allowed you to be able to custody Bitcoin and Litecoin and Ethereum, right. Just three assets. And what's interesting at this time is they were still talking to Paxos. I know this because I was in those conversations back in the day, and it was going well until and post-COVID, there were some challenges with Binance and Paxos. If you remember, with Paxos issuing a stable coin for Binance in US dollar denomination, and there was some regulatory clarity issues, and they paused the whole issue in terms of issuing stable coins. I think given all that's transpired in the industry from BlackRock and Bitwise and all the other sort of Fidelity, I think it strengthened, which to me is the industry coming together to say, we'll deal with the regulatory issues. And as long as we're doing all the right things from a perspective of adhering to all the payment standards and keeping all the track of assets and ensuring that there's no sort of mix up between the client assets and exactly what many of the other industries have done in mixing up the assets. In general, I think they're taking on, on the side of caution to doing all the right things to issue this, because it's been on their to-do list for almost 3 to 4 years. So I think it's a great thing.
Yes.
What I begin to look into is, one, how many stablecoins do we need? What happens to the existing stablecoin market? For example, Tether was in news lately to now have enough backing with US Treasury, bigger than many countries, including your own, Australia.
Yes,
It has
including Australia.
more
it's bigger than Australia.
Treasury than the country of Australia, UAE, and seven other large nations per se. And then you have USDC, which was the pioneer and leading elements. So there's a little bit of the Me Too players coming into the market. And while it's great for the industry that you have more options, I begin to look into how they're going to make money from this, because traditional stablecoin issuers have made money by not extending the overall yield that they would get from investing in money market. And it's a great time because money markets are offering 6 to 7% given the interest rate hike that we've seen from Feds. That's not been passed on to many of the audience, which means that they're relying upon a lot of stable coins being outstanding and being transactional in nature, which allows the likes of Tether and USDC to be able to reap the benefits of the yield that they get on the treasury and other instruments that's backing the stable coins. So that's another interesting point to me is, does that mean that if PayPal, which by the way, serving close to, out of the 300 million Americans, it's close to 150 million. So half the Americans actually have PayPal and Venmo accounts in general. And PayPal and Venmo are closed loop systems. What that means is that if you have a bank account, money comes into Venmo or PayPal, then it can remain in that ecosystem and you can send money to PayPal users and Venmo users. And at the end of the day, money resides in the entire system. And it's a great transactional mechanism for PayPal because they're able to, again, keep the money in a custody account or benefit from the interest and still be able to. So systemically, whether I'm sending a Venmo transaction or PayPal transaction to you, Derek, or sending a PYUSD to you, there's little difference from the element of payments per se. What's interesting, which came up, is cross-border. So can a PayPal account holder in Argentina hold on to a PYUSD, which is a US denominator stablecoin, giving them access to US dollar system? Because the moment you have PayPal account, the assumption is you're KYC'd. So you at least have lowered that hurdle. And anybody who has a PayPal account, the idea is that, again, at a global scale with several billion users, can they give them access to USDC because there's no regulation against it? I think that's an important part, that exposure to USDC, which means increasing transaction volume and the ability for PayPal to be able to, again, rely upon yield earnings. I think that's where my head is at, both in terms of more players, more options, more access, and the fact that PayPal still has the ability for you to be able to buy USDC, buy Coin Ether and Litecoin. I think it's an interesting mix, Derek. It's all positive from my perspective.
I think it's very positive. Look, their first statement is that this is available for US users, but I would argue the reason why is because as they roll it out into each country at a time, there's another set of regulations. So they've released it here first with the intention of releasing it to each one of the countries around the world. You raised the point about, is there a business model around the stablecoin? Maybe there isn't, Nitin. Maybe that's not important. Maybe their business model is all the other commission-based, transaction-based payment systems that they do all around the world. And that's their prime thing. And the stablecoin they use and operate is a break-even position. Often that happens with these large corporations. And by the way, it is large. It's capitalized at about $100 billion as of yesterday. I just had
that's crazy. It is big.
It's not a bad size. It's the fourth biggest digital payment company in the world. The largest one is, we'll walk back. The third largest one is MasterCard by capitalization. The second largest one is JP Morgan by capitalization. And the largest payment one is Visa by capitalization.
Visa,
and so it just sits fourth behind those. And we know with MasterCard that MasterCard is also moving towards digital assets and transacting digital assets on its platform.
They are.
So This
And
brings
so
me
is
to this
Visa.
question.
And so is Chase.
And so there you go. So all three of them are saying, which is this fantastic confluence between this technology, the industry, and the traditional major players in it. And as I said, I've never been a libertarian. I'm not sitting out there going, our task is to usurp and undermine it. It's not. I think we should coexist in this world, because if you coexist with decentralized finance and centralized finance, decentralized finance is algorithm driven, highly efficient, and very inexpensive to transact, which means ultimately PayPal, Visa, and others are going to have to compete with decentralized finance. So even then, it's going to reduce the costs associated with transferring money and paying for commercial items around the world. I do wonder right now, however, how the SEC is going. The poor underdog, right? I hope that's how they'll become in this particular space. I'm sorry to display my bias, but the SEC, was doing a very sort of robust job of trying to reduce payment on-ramp and off-ramp opportunities for banks. And here are the four biggest payment platforms in the world, all moving towards digital asset payment system. It seems counterintuitive to what the SEC is doing. Where do you think their head might be at the moment?
Yeah, but Derek, there's a few things, right? One is, if you look at the regulatory landscape, and of course I do spend a lot of time, you have CFTC for commodities and futures market,
Yep.
you have SEC for securities, you have FinCEN in the US for, financial sort of transaction network, which is basically payment systems, crimes enforcement network. So you have different regulatory agencies which keep track of these various assets, whether it's a payment instrument or whether it's a security instrument, or sometimes security instruments start out as commodity and eventually become securities, with an exception that CFTC in general has much broader powers of everything, all the transaction networks in general. And layering on that, you have Federal Reserve and OCC that looks into the risk. So they have all these alphabet soup of government agencies that are oftentimes more than one, have jurisdiction on different aspect of a financial system. Some of them are looking at financial stability. OCC looks into, at least from a US context perspective, and the framing is something similar in every country. Every country has some jurisdiction. So I think in this case, especially in context of stablecoin, and as you rightly pointed out, that Visa, MasterCard, JP Morgan Chase, PayPal, payment is their business, and payment actually is quite profitable business, not only because of the fact that whether you're leveraging the arbitrage opportunities or relying upon what they call as net interest income, or NII in short, is monetizing the ability to derive the yield while facilitating movement of money, while the net sum total of money is what you have in a secure custody account that yields money in general. I think it's their business and they have to stay ahead of it. Exactly what PayPal has done, what MasterCard and Visa have done. They all have to stay ahead of it, because they view not just starting from Bitcoin, but other blockchain ecosystem as payment infrastructure. They view the respective native currency as instruments, and they want to be able to leverage them both to be able to not only understand, consume, adopt, but also progress their business from that perspective. So I don't think SEC is a huge issue here. What would be a huge issue is agencies like FinCEN and payment providers and financial stability, because one big concern that the central banks would have in this case, central bank is all about understanding the money supply, right? So there's a M0, M1, M2, which looks into what is the base supply, and based on that, what banks do in terms of credit increases the money supply, and every layer of that lending increases money supply. And one of the things that again, to protect inflation, to control inflation rather, which obviously they've not done a great job in the past, I would say 15 to 16 months, Derek. But one of the concern for them is the stablecoin increasing money supply, because that changes the calculus in terms of controlling inflation and also jobs. Those are the two mandates that central banks have. So I think central banks in general, OCC would have risk. What is the risk of stablecoin? And they've been done a bunch of studies, of course, from the establishment done on the space from that perspective. But I would say this, and I'll pause, is in general, you're absolutely right about one thing, that maybe issuing stablecoin is not about making transactional revenue. It's not about making money from transactions like they do with Venmo and PayPal. But if you remember the failed Facebook project called Diem or Libra back in the day.
Maybe too early.
The intention it's too early, but also the fact that their objective was not to make money from payments. They wanted their platform to be sticky. What I mean by that is, if I'm on Facebook and I have the option to send you money using WhatsApp or to buy and engage in commerce on Facebook platforms, I don't think Facebook want to make money from payments. It's a cost of doing business, but they want to attract more advertisers. They want to attract more commerce. And they would eat the cost of what they would have to make investment into payment infrastructures, which facilitates movement of money cross-border between individuals using WhatsApp or facilitating payments for commerce, because they would make money off ad revenue. They would make money from the B2C business models, everything else. So I think you're right about one thing, Derek, that it may not just be about PayPal monetizing it. Like, we got to have this. We got to have this to stay relevant. We got to have this to grow our business. We need to understand this. And the earlier we get onto this whole thing, it will help us shape and sharpen our business in future. That's the way I look at it.
Makes good sense. So that's why I find this intriguing. And it's certainly not even, I don't think, the beginning of this story of this confluence, coexistence of centralized and traditional payment systems, gateways, organizations, banks, lenders, etc., digitizing their business. Actually, we need to sort of state that one further. Their business, to a degree, is already digitized. They're transferring everything in a digital format. It's just not a tokenized, decentralized format, or it's not a tokenized, enterprise-based, decentralized format. So it is a variation of what was a generation or so ago, their digitization of their business. And I'm hoping, and I think we're seeing that they see this as a way to maybe see borderless commerce start to occur. And I think that's a very good thing to see such commerce occur. And there'll be many others. We just quoted the four biggest. There's a top 20 in payment systems and payment gateways and payment rails. There's plenty of others to follow. So, hey, on another topic, we just mentioned the SEC, then a little side throw in here, and that is Coinbase has approached the judicial system with intent to simply remove or wipe off the charges against them by the SEC. It's a relatively standard set of legal play out, no doubt, but it's interesting that they're doing it. They're simply saying these charges are foundless and should be dismissed. So we'll see how that plays out. But that game is on, and they intend to fight well for a solid period of time. Now,
that's amazing. Yeah.
Artificial intelligence and blockchain wrapped around this. This is an interesting little side topic and one that really is getting people's interest. Hey, Nitin, you're a professional in so many things, but I'm sorry, right now, I want Petros Zephos in here, our data scientist.
I know, we need Petros for this.
Sure. So here it is.
We need Petros for this one, yeah.
ChatBTC is an artificial intelligence chatbot created by Bitcoin development shop Chaincode Labs, and is trained to answer questions about the dominant blockchain using high quality sources and technical information. It's really interesting. So in other words, rather than just ChatGPT with a broad knowledge base of everything, they're using ChatGPT, but they're training it on deep knowledge wrapped around BTC. And they're making this sort of this a specialty trained body of knowledge. Now, we know, Petros keeps telling us that this isn't artificial intelligence, and we should call it as it is, which is a large language model that it's operating. And so, I find this really fascinating, not just the fact that we might have, this large language model that we can go to anytime and get in-depth answers relating to, what's happening with Bitcoin's history, background, transactions, how it's done, etc., and becomes a knowledge base. But I also ask the question, is if these large language model worlds are continuing to grow, wouldn't sooner or later the major large language model have sufficient information and training that it could usurp this need for this specialty slither of large language model?
So I'm not only fascinated, I actually wrote an article on AI and blockchain, as you know, Derek, and had a massive reception in terms of what is the real utility, and not just because
Mm.
AI is in the news and we want to all get enough clicks, but I actually went down a few layers deep to understand the synergies between AI and blockchain and how these
Yeah.
technologies are evolving in tandem. And I use the word tandem because this is not happening by accident, right? If you look at blockchain, we use the term data structure, which basically blockchain is nothing but a linked list. It's basically a linkage of all the transactions, a list of transactions that are
Yes.
in processing. And one thing about AI, which is also true for large language models, you got to train these systems to be able to find the various linkages and sort of amalgamate the data, which is what Petros is 100% right, that it's all about a series of training. It's not, ability for them to do the true nature of artificial intelligence, which to me, the holy grail is general intelligence, which is the ability for me and you to have the conversation with our knowledge nodes and be able to switch context as we are speaking. Again, we switch from PayPal to a different topic altogether. That's general learning, because we have all these general information that we bring it together and provide a perspective and provide it. I think that is the holy grail of where we want to get to this. But what's interesting about, and I actually spent some time today and, on Chat BTC, because to me, it's like, what is this thing? Why is everybody trying to build the specialization around it? And Chat GPT is quite good. It's quite good in terms of, it actually has done a lot of efficient analysis on a lot of things. And after 3 queries, it put me behind a paywall. Even before I had a chance to query and ask questions. And I did actually ask 3 questions, which I didn't get the satisfactory answer for 2 of them. I used the term block height, commonly used term in our industry. I looked into when is halving happening, which is at certain level. And I don't think it was able to give me the satisfactory answer that I was looking for with acumen and with perfection, because all it should know about is Bitcoin. At the end of the day, it should be, and so the corpus is essentially a body of knowledge. Corpus is the term that we use to train these models to say, hey, let me collect all this data, and then I need to find the linkages with data and provide the weights that if I use these terms, this is how it needs to go in and retrieve that information, present that information to me in a much more. So to me, it was disappointing, to be honest. And I think that to me, it's a trend that eventually I could use something like this to research a specific chain, a specific asset class. And as you know, as when we were looking into this portal asset management stuff, we categorize the different categories in understanding the industry, exactly what people would do for traditional finance, in correlation between, let's say, transportation and shipping, or correlation between petroleum industry and transportation industry, that increase in one would lead to increase in another. And we're looking at that correlation between what will happen with NFTs and Web3 companies, because that means rise in the storage capacity that Web3 would offer, and deduct inference from that analysis per se. And I just think that it's that I can see this to say, can we have chain specific or blockchain specific or crypto investment specific sort of models that can make the search and inference? I still think you need to augment human knowledge. So this becomes augmentation simpler. Though I would say that Chat BTC was, to me, a disappointment. I would say it didn't answer the basic question that I actually asked of it. Maybe it'll improve in over time, but that is interesting. I think that industry heading that way.
Yeah, it is. I mean, the whole world of this large language model is one where you are dependent on its knowledge base. And Petros was explaining to me that Watson's, IBM's equivalent of ChatGPT, which is an enterprise-based ChatGPT equivalent, needed to be trained. And Watson utilizes, like all of them, a variety of tokens, and each one of those tokens represents something. So, by example, a horse, and then another token might be a horse that dances, another token a horse that dances in Spain, et cetera, until finally you discover it's an Andalus horse, and you get the history of it, and you put all those tokens together. And each one of those tokens, of course, has all these vectors that sit off it, which are the describers of that. Well, there are 1.5 trillion tokens in Watson's large language model. It's pretty clever. And
it's pretty amazing.
It's amazing. And generally, IBM crawls the entire internet every 30 days, and it downloads gigabytes of data per second to do that, to keep it updated, right? So whereas we saw ChatGPT, which we're all loving, did that up until September 2021 and then stopped. So you can see there's a lot more potential in ChatGPT to move forward.
Yeah.
But at the end of the day, it doesn't get into walled gardens. So the walled gardens, such as a big car selling site or Facebook, so these are all
Yeah.
walled gardens. It doesn't crawl walled gardens. It's told, don't go in there. It's not for you. This is our. Well, there are knowledge bases in those areas. And so I think there's potential for future AI specialty where permission's given to those walled gardens possibly, and you'll get a chat version or a large language model version wrapped around a sector of an industry. And then you will know that you don't have to know every prompt to find your way into that sector of the industry, and you'll learn from it. But AI is another one of these extraordinary technologies that can sit alongside the world of blockchain, and it can sit alongside the world of cryptocurrency, which is payment systems. And of course, in the future, you'll see AI equivalents or large language models transacting between each other, paying in payment methods that might not be anything we recognize today. And they'll be utilizing a blockchain as their accounting system. So what's important to know is that none of these technologies, and even traditional centralized technologies, live in silos separate to each other any longer. Their future is going to be together, and that I think then leads to this world of exponential growth. If you've all of a sudden got these accelerants around the place, like large language model accelerants, you've got accounting systems, seamless accounting systems like blockchain accelerants, you've got seamless and borderless payment systems like cryptocurrencies, and you've got decentralized finance systems, you are seeing an environment that are like Lego blocks that you can build together at a rapid rate. It keeps me excited about what's happening in the future.
It is, and you use the right term to exponential sort of growth, and it makes me more effective. And I realized that for simple things like an abstract for a conference, and I used to do this myself, and I still write. And what's interesting, Derek, is I write every so often as things pop up in my head, and I see challenges, and I say this is what we should do, and share that and get perspectives from. So I write this for myself, and I learn in the process. And I wrote a nice article and I sent ChatGPT. I actually go through a formal edit through somebody else because, you're putting your reputation. So you want to make sure the prose and the grammar is all good. And I sent this to ChatGPT, and ChatGPT, of course, did a fantastic job in less than 30 seconds for free and compressed the whole thing from 1,500 words to like 1,000 words or whatever.
Yes.
Did a fantastic job, but I couldn't feel it as an author. So I still had to rely back on and I do this every single time. Like, do I feel it now? And I never felt it, because it was very, very synthetic edit. It looked into all the rules it had. And sometimes you don't need rules. I do need to be able to have my own pointers of things I want to cover and focus on 2 or 3 areas and everything else. But I think that it has made me efficient and effective. So it's augmented my function. That if I want to write an abstract, which honestly doesn't matter for conference abstract, you write an abstract, send it because they want to publish it. What matters is your conversation when you're presenting in a conference, which is mine. But I'm not spending time now, 15, 20, 30 minutes and writing an abstract that made sense. And I just provide a few metrics, it comes back, I pick 2 or 3 different things, and I'm done. I just send it over. The conference organizers are happy because they don't really know the SME. I'm the SME in those areas. So some of these things, Derek, it's exponential. Slowly, if each one of us begin to leverage it, it is an exponential growth pattern that I'm able to do a lot more, consume a lot more information, enhance my own learning, whether it's for chat BTC or generalized learning or Ethereum, whatever the case may be. Each one of this progress is good in its own regard, I think.
And each one of these, you say exponential growth. And I would say that each one of these bolt-ons are accelerants to those exponential growths in this area. And I watched a movie a little while ago called Her. I mean, it's an old movie.
Yes.
But it's a fascinating movie because it's about somebody having a relationship with artificial intelligence and what that means. And I laughed at myself because I have a relationship with ChatGPT. I have the version 4, I pay for it. I also have APIs connected to it. There's software development occurring off it, all sorts of things that are doing it with different developers off my account, my ChatGPT account. When I think tank strategies going forward, and I think tank software development structures and things like that, I think tank marketplaces, my first friend is ChatGPT.
It's ChatGPT. Yeah, I agree.
And it keeps the stream
That's amazing.
of my conversation.
Yeah.
And we continue to have this relationship. So anyway, maybe those listeners are sitting out there going, that poor fellow needs to get out more often. But nonetheless, I do find it's a fascinating opportunity to utilize that. Hey, next week, let's talk a bit more about real world assets and about what it takes to put infrastructure in place to bring those real world assets into this decentralized digital domain. Nitin?
Yeah, no, I think that's a really important topic as the momentum in the industry grows, Derek. And there's a lot of conversation. I personally am involved by the virtue of my day job, but also with industry thought leaders is what do we need to do? Because what PayPal has done, what BlackRock is doing, and what many of BlackRock's cohorts are doing in bringing the real world asset to this same industry. I'm of the opinion, which I've met some of the very interesting startup firms, and we'll discuss them next week, in terms of regulated DeFi, to say, hey, DeFi is great. Of course, this week was quite bad for DeFi, as we'll discuss again next week. That can we regulate this thing, because that'll provide some structured sort of guardrails to protect itself from a lot of these things that the DeFi protocols have gone through. So we should spend some time on this in dissecting what is DeFi, why are we focusing on asset tokenization, what is the convergence of these two. We can leverage the help of ChatGPT, Derek, but for the audience, I like to say that I use ChatGPT as my intellectual sort of awareness thing. I'm not romantically involved with ChatGPT at all. Just wanted to clarify that for the audience.
This is a disclosure section here. This is a disclosure section.
You mentioned her, and then you were talking about I'm spending more time. You have a relationship. I have no relationship with ChatGPT. It is just transactional. I ask a question, it responds, and I will choose to accept or reject. That's it. That's the extent of my relationship with ChatGPT.
I have a little bit of a relationship with it. I find that even if I get annoyed with it, it's very pleasant in reply, and that's quite a nice thing. All right, I'll see you next week. And in the meantime,
take care, Derek. Always fun chatting with you.
Yeah, have a great week. And for those listening and enjoying this, please feel free to share it and make comment. We're always interested in your views and directions. We'll see you next week. Bye for now.
Bye for now.
We hope you enjoyed our weekly conversation. If you have any questions, comments, or suggested topics, please contact Nitin Gower or myself on the emails displayed here or via our LinkedIn profiles. Feel free to subscribe and share with like-minded friends. Stay well, inquisitive, and engaged. See you next week.